Hi, folks. This is Lee with the Market Sense for the week of March 24th, 2020. The charts in this presentation are provided to us by the Trade Navigator software that's made by Genesis. And this is a weekly bond market chart. And if you look at these last couple weeks before this week, there is 24 and a half full point range in less than 2 weeks there. I can tell you I've had a lot of years trading bonds when they didn't have a range that big. I think that makes it fairly likely that that is going to be a range. I suspect they'll stay within that for quite some time, and at some point they'll start bouncing back and forth, and there'll be some opportunities for quick trades, kind of. At this point, unless something just catastrophic happens one way or another in global economies, I really think that's established a range that's just going to exist for a while. This middle moving average here is in the 177 area, give or take, and they seem to be kind of drawn to that. Uh, it kind of doesn't make any difference to talk about the other upper H's up here or down here because neither of those seem important right now. They'll start shrinking down and they'll start creating some price pattern is the highest probability, and hopefully we'll find something we can recognize there. But until then, I think you just have to accept the fact that the volatility is just out of this world high, and we'll wait for them to calm down before doing anything. And in case bonds aren't volatile enough, here's a look at the stock market. Um, this is unusual price action in the first place to just turn off of a high with no retest, no warning, just kaboom. So it would be unusual for them to just turn right back up. Now, obviously, they've had a pretty good run up here. They've turned up strongly from early in the week, and Tuesday was the biggest up day in like forever in terms of points. Um, could it be a low? Yeah, of course, it could be a low. But the last time I saw a day like Tuesday was back in 2008, October of 2008, and it bears remembering that the actual low wasn't made until March of 2009, after that day came flying up off the lows like that. I think things are compressed. I think the market tends to do things much quicker than it did 10, 12 years ago. So I'm not suggesting it's another 5 months before we see the low, but I'm a little bit uncertain that there's a low here. I think we might at least go back and test it and probably take it out before we're able to establish a low. Now, that doesn't mean they can't go higher from here. We're looking at 2505 as being the lower moving average, which is just where they should go to continue the trend down. And they could certainly go there or even up to the middle moving average here, 2675. Nothing out of the question on that. In fact, I'll bounce all the way back up to these old lows here. The first spike down was in the 2840, 2850 area. That's sort of a normal area to act as resistance for this move. Maybe not this week, but at some point you'd expect them to be back up there, even if they're going back down to new lows, which again, it's just a probability. But I think they probably would. I think it's wrong to assume that the worst is over and we're going to go up now. Doesn't mean it wouldn't make sense to try to trade them from the long side this week if they continue up, though. Just don't be don't be sanguine. Don't be assuming that we're in good shape now. I'm not sure we are at all. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for checking in to see how we're doing, and boy,